Sterling Swiss was a very nice trade today. You got the inside days starting the week Monday inside of Friday's range. We broke structure in that London session, right? So we came up on Friday structure. We failed to make a higher high, right? We came in broke structure. So that's a change of character. And then we proceeded to consolidate really. And at this point here, you've got to be thinking, right, I'm looking for shorts. Right, you've got all of this to sell into. So you're looking for shorts. We failed to make a higher high start of the week. This is the initial balance for the week Monday, right? The high and the low. And we were inside of that. So if we're inside of that, then the next day you've got to be thinking, well, if we didn't pull it off on Tuesday, then perhaps Wednesday is going to be the setup. You've got 2 days worth of order flow and information, and last week's information as well. So this is how this template, these indicators that I've done a video on, can help you map out your trading setups like this. So you've come up, failed to continue higher, failed to break the prior week's highs convincingly, right? So the theory is, well, volume is now trapped and you're moving against that volume, breaking structure, coming back inside, which you expect to pull back once you've broken it in a displacement. Once you've broken the structure, you'll get a pullback at some point. So there it was, moving into the US session. So the US session, in fact, you've got to be thinking short. You might have made some money shorting in the US session on Monday, but we didn't get a lower low. So we stayed inside of Monday's range on Tuesday. We've got a topping pattern here, these railroad tracks. Therefore, we proceeded lower. So again, you've got to be thinking to sell high in the New York session. Again, you might have made some money in the US. And then, so we closed that day as an inside day. So you're thinking, well, I'm still looking for shorts. And what you'd be looking for is a pattern that you can take advantage of. So in here, within London, you would have had a pattern within this structure, a bearish pattern to be taking advantage of that sell-off. So if we go into here, so flat in the Asian handover to the US, to Europe, then a 15-minute chart. So on the day, you would have been looking for your opportunity to short. So at this point here, we've broken structure. Okay, we've come up in pin. So that's going to be telling you, well, that's a stop hunt. And then you could be moving down to the 5-minute chart, looking for your signs of exhaustion to the upside. So you've got those railroad tracks, you've got a pin, you've got another pin here, and you're looking for the engulfment to the downside. So there it is. You could have taken that, breaking structure, stop above wherever you are comfortable with, and targeting wherever you feel is appropriate, however long you want to hold on to the trade for, really. But that could be initial target. I completely blew off. So in this case, we would have been quite unlucky because we would have been stopped out. So perhaps your stop would have been best placed above the highs. But either way, that's the sort of setup we're looking for. In this case, very unlucky to have got stopped out. And so on. So that was, excuse me. That was the trade. Now, bring us up to date. If I can do that. It's like this. Yes. Right. Um, okay. So in this scenario, when you get that sort of displacement, you're looking for the correction. You're looking for the correction or the continuation. But in this case, we got the 1, 2, 3 pushes into the low for explosive move out of the bearish structure. So taking it here will proven pretty good. So breaking structure, targeting perhaps over here. Stock would be tighter than that perhaps. And where do we go from here then? So let's back it up. So we are heading towards last week's lows. No reason why this correction here can't roll over and continue lower. And if we pull up our Fibonacci from top to bottom, we could be targeting minus 272, and a touch below the last week's lows, and then last month's lows further down, depending on how long you want to hold on to that trade for and how you're going to manage your risk. If we pull out to a daily chart, what does it look like? So it looks like we're at resistance. Selling in the upper third of the, or thereabouts, of the range is always favorable. Selling high up. Pulling out to a weekly chart. We've got this W formation, so just be cautious because there's likely support in this neckline. Because the alternative is the impulse, correction, and continuation to the upside, because we're yet to fulfill the neckline on the upside between there and in here. So there is the possibility of a move up into there. That's on the weekly time frame. So in this case, we've got the W there on the daily as well, as you can see. So we could be moving into this neckline support only to come back up. So I'll just draw that. That could be the scenario. On the other hand, this is a broken down market. Had the neckline held, because it hasn't really hasn't held, has it? Because of that, I didn't see that in the wick. So that wick has actually penetrated the support. So let me back this up again. I couldn't see it because of the right. So we've actually wicked below. I mean, it still could hold, because we've moved back above that neckline now. So really, you want confirmation that this is going to continue lower. As much confirmation as you can pull out from the information that's in front of us. So, first of all, you're going to need to see a deceleration of this correction. And in fact, the higher that this comes, the better. Um, Ideally, I mean, it's a bit late in the day whether it's going to do this or not. Ideally, we want this coming up into here, that sort of area. What would that look like on a Fibonacci? This is the 4-hour chart I'm working from. So move up to test the 61.8 on the next 4-hour candle. We've just literally moved over to the next 4-hour candle. So this momentum looks as though it's going to continue. So that's fine. And then what would happen at the end of the day, you'd have a candle close with a short body and this wick, a wick that will be left behind. And those are, generally speaking, that's a bearish candlestick because you've got downside momentum. Right, so you've got a topping pattern. You've got this pin hammer, whatever you want to call it, doji, and that in itself indicates lower prices. So, and then this candle here is pretty much engulfing the doji, okay, including the wick. And if it closes up high, then you've got that whole wick on the lower time frames represents the correction, and that correction would usually be met with a continuation. So if it corrects up, say the next candle moves up pretty high up into that area, and then you've been expecting it to start to roll over and continue lower. So that's what we're looking for. However, if it holds above this neckline of that pattern, that W formation, if it holds above the neckline on a closing basis, then you'd be in anticipation of that continuation to the upside. Coming down to the 1-hour chart, it's a nice smooth correction. So I think there are going to be prospects of a sell-off, but don't just sell because it's correcting. You need to wait and see that decelerate on the upside properly and start building resistance like it's starting to do on the 15-minute chart, but you want to see that on the hourly chart, that sort of formation. So a few more candles confirming the correction is terminated. That might happen higher up, it might happen here, we don't know, but that's what we're looking for. And when we see that bearish bias building, the price failing to move higher, start breaking down structure and then rolling over. Okay, so I think that's a pretty good sum up of sterling Swiss. Sorry I had to wait for so long.